Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're going to be talking about BFT stock and Paysafe again. And we're going to be talking about something specifically which was raised during the previous video. So if you haven't seen that one already, then I definitely recommend checking it out. However, in this video we're talking about the lockup and all about that, and specifically why it's so important for us as investors. It is something which I have seen be a bit misreported on YouTube so far. So hopefully this video demystifies it, clears it all up and makes it clear for everyone who's investing what the lockups are. Now, since my previous video, it's been a great couple of days for BFT. There's been a couple of really big announcements with partnerships, including Microsoft and a number for Skrill, which related to the crypto space. Now, clearly, this is all really positive news for the share price in the short term, particularly before the merger. Now, in my previous video, I did touch on the risk that perhaps there could be a dip in the price post-merger, and that being a result of a large number of the shares being held by financial investors, particularly private equity investors, whose business model is all around exiting and selling their investments, and also quite a large pipe. Now, what's so important here then is understanding the lockup, the period of time which those shareholders are not allowed to sell their shares for post-completion of the merger. In this video, I'm going to share all of my research with you and we'll touch on why this is so important. Everything I'm saying, I'm backing up with information from the 425 or the 8K. I have seen a number of people actually address this on the internet, both on YouTube and elsewhere, and have actually made incorrect statements. So hopefully this video can clear it up once and for all. Now, one other thing I should say about this stock before we get into the video is actually I do think it has some really exciting long-term trends. I like the investment thesis. I think the business is incredibly well positioned to capture a really exciting high growth market. However, as a good investor, you need to be aware of all the potential risks. If you ignore those, you're gambling, and that's not a good way to make money in the long term. Yes, it may work in an incredible bull market like we're seeing at the moment. However, when the market turns, and at some point it will, not doing proper diligence and not doing proper research will result in people losing money. So this is something we should definitely be aware of. So if we do see a dip in share price, whilst it may be material, I do think that long term actually there's some really exciting dynamics here and that it does make a good investment. I think when looking at the business and comparing it to some of its comparables, it does give you confidence in the long-term valuation of the company. I also have a really exciting video coming on BFT in the next couple of days, which is all about price targets. In that video, I'll run you through my financial analysis and my financial model and share with you the findings, which I think you'll find really exciting. If you're new to the channel and you like investing related content, then smash that subscribe button. I spent a lot of time reading through all the filings for this, so if you appreciate that, then please smash that like button. It's so helpful in pushing the channel to a wider audience. And as always, whilst I am a professional investor in my full-time job, I'm not a financial advisor, so this video is purely for educational and entertainment purposes only, but let's get straight into it. So first up, we just need to remind ourselves of the pro forma shareholding here. So as we can see from this chart, just under 46% of those shares are owned by Blackstone and CVC. Now those were the investors that in 2017 acquired a controlling stake in Paysafe, since then have grown the company both organically and inorganically with acquisitions, and as today the investors who've made the decision to proceed with this SPAC transaction. Now they're really important to keep in mind, but we'll come back to them in 1 second. Now of that pro forma shareholding, a further just under 28% is owned by the PIPE investors. Now combined, these two groups of shareholders own just under 75% of the pro forma ownership of the company. And so as investors, it's really important we understand what their potential rationales are and what the potential motives are. Now both of them are subject to different periods of lockup, and there are certain criteria around those which potentially change the length of them. Now let's look first at Blackstone and CVC. Now Blackstone and CVC are, as I said before, private equity investors. What private equity is ultimately buying companies, often using debt as part of a leveraged buyout, improving the company and growing the value, and ultimately selling it. That's the business model. That's how private equity makes money. Private equity typically makes controlling investments, and by that I mean they have the majority shareholding, are in control of most of the strategic decisions, and have majority board representation. Now this is really important because post this transaction, that's not something that Blackstone and CVC will have. What's more, private equity investing is very liquid. They can't easily sell their stake in the company at any point in time. They're private companies held by the fund. Typically, private equity funds don't want to be holding stakes in listed companies. Yes, they do typically use IPOs, or as we're seeing more recently, SPACs to help them exit their investments. They don't want to be holding stakes in companies they can't control, and where the valuation can fluctuate on a daily basis. So ultimately, yes, whilst Blackstone and CVC can hold stakes in listed companies for a very short period of time, it's not their core investment strategy, and it's not something they want to be doing. They make their returns by selling their stake, and they will ultimately be doing that. Without getting too technical here, the longer they hold an asset without growing the value of the company at a certain rate, it detrimentally impacts one of the key KPIs for private equity funds, which is the internal rate of return, or the IRR. So ultimately, Blackstone and CVC will look to be selling their stake. But how? Now, in my previous video in the comment section, I did notice that some people were suggesting that actually it's not a concern because BlackRock do hold stakes in a lot of listed companies. However, this is Blackstone, not BlackRock. Yes, they are linked, and if you're interested in that, a really great book which I really recommend about the founding of Blackstone is called King of Capital. It's one of my favourite finance books. So if you're interested in private equity or Blackstone or BlackRock, I definitely recommend checking that out. However, they're different entities. Blackstone does not want to be holding, from its main private equity fund, stakes in listed companies. But most importantly, how long is the lockup period for these funds? So looking at the filings, we can see the lockup period is actually 180 days. However, there is a trigger, which if met, means that the lockup period gets shortened. That trigger is that if the stock price is trading above $12 for a period of 20 days, within a period of 30 consecutive trading days, then ultimately that period will be shortened. Now, I think everyone here probably believes the share price is going to be above $12, so I think we can realistically and safely assume that actually that lockup period will be shortened. So assuming that condition is met, the lockup period is actually around 80 days here. The first 20 days where the price should be above $12, and then the 60-day lockup period thereafter. So 80 days in total. So as investors, why is this so important to us? Well, ultimately, assuming just a $12 share price, knowing the shareholding that CVC and Blackstone have, that equates to around $3.9 billion of share value, which could be sold following that period. Assuming the stock price is around $25, then that increases to around $8.2 billion of shares, which can potentially be sold. So yes, whilst there are several mechanisms by which these shares can be sold, whether as a part of a private transaction or in the market, it is definitely something that we as investors should be aware of. So now let's look at the PIPE investors and the 27.8% which they own. They're actually subject to a lockup period of slightly longer, and that is 270 days. However, again, they have the early trigger. If the share price is above $12 for a period of 20 days within a consecutive 30-day trading period, it gets shortened to 170 days. So the initial 20 days where it's trading above $12 and then a further 150 days thereafter. Assuming a share price again of $12, that equates to around $2.4 billion of equity value which could be sold, or at $25, around $5 billion. So again, this is really meaningful for everyone as investors and something that everyone should be aware of. What this ultimately means is that around 75% of the overall shareholding could be sold within the company within the first 150 days. Now, I'm not saying it will, I'm saying it could. And as investors, we definitely need to be aware of that, as that could have a very big impact on the share price in the short term. Ultimately, private equity makes money by selling investments. So I do have a strong degree of confidence that they will be selling their stakes. The mechanism by which they do that, we don't know, but it's something we need to be aware of. Both Blackstone and CVC both have track records of exiting companies through IPOs, and if you use those as a benchmark, following the expiration of the lockup period, they've exited their investments completely. So personally, I do think we're going to see a dip in the share price post the expiration of this lockup period. Ultimately, the company is still very well positioned, its market opportunity is massive, and I do think in the longer term, that's not something we need to be concerned by. However, personally, it is influencing my investment position on this, and I do personally plan to exit my investment in BFT before the expiration of the lockup, and then I'll look to re-enter the investment once I know that Blackstone and CVC have sold their stakes. This is just what I'm doing, it's not financial advice, everyone should make their own decisions on the basis of their own due diligence. Now, I know I used $25 as an example there, but personally, I do think that's still fairly conservative given the market opportunity here. In my video, which I'll upload in the next couple of days, I'll share my full analysis on the potential price targets I see, and I believe that everyone invested in BFT now should be very excited by that. So make sure you're subscribed so you don't miss that. Thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. And as always, please let me know your thoughts and comments in the comment section below. I always find there's some really interesting debates, perspectives, opinions put forward, and so would love to hear your ones on this, so please get involved. But thank you so much for watching, and I'll see you in another video.